this company has really capitalized on the transition, propelled by the COVID-19 lockdown. It's done an incredible amount of growth. And now it's expanded to other markets. Now it's doing very, very well as well. And it brought into a new market in the last 12 months. So our view is that this is a structural growth company. At the same time, in the last few months, the share price actually has come off as the market sort of moving on to something else. So our view is that this company will do very well, buy and hold. And there's a short-term catalyst coming up as well. Tomorrow is its AGM. We think the company will give a good update. You might see a short-term profit to be made there, but our view is that this is a company where you want to buy and hold.
Jun Bei, is this part of the recovery play though story, given the fact that people are actually eating out in restaurants now? They're not getting deliveries as much. What do you think of that balance?
Absolutely. Look, stay-at-home winners are going to, lag the market performance. As a basket itself, things like JB Hi-Fi, things like others such as Bunnings and the like. So, as a basket, they will do a little bit worse compared to the one that's reopened. But don't forget, for the businesses that's less mature, that still has a lot of growth ahead of it, such as Domino's, this is actually a great buying opportunity, because when we talk about earnings weakness, it's really just for the next 12 months. And post that, Domino has so many structural growth drivers from different markets that will propel it forward. I take a 2-year view that you have to, look at those business on 2-year view. It actually looks not as expensive as some of the even reopening winners.
All right, that's Domino's. Let's switch to Xero. Now, because this is a cloud-based business, it's accounting solutions. And I guess, regardless of what's going on with the pandemic, this is all about current trends that began well before the pandemic about moving things online.
Absolutely. Look, it's interesting how I think it's just following on from my horse pick. Let's stick with the quality companies. So Xero is a quality company. It's done very well. It's done very well for so many years. Now it's dominated the Asia, the Australia, New Zealand market. It's gone to UK. It's done very well. Now it's gone to US, and its early signs, early indications, doing very well. Now, pandemic actually has hurt its businesses a little bit because of SMEs. Small businesses were shut, and there was a lot of disruption on that front. So we believe that as we reopen, you will see that re-acceleration of growth, and it's got so many geographical locations it can grow into. So this is another buy and hold stock. Now, the reason I brought it up today also is because it's got its result coming up as well. So you do want to buy companies that has some catalyst coming up. Just to give you that quick, you can make a very quick return very quickly, and yet provides you that, entry point ahead of the long run of growth.
Jun Bei, one of the other thematics that's playing out at the moment is the Great Resignation. We're seeing a lot of people looking for new jobs. Seek, is it one that you'd be in your portfolio?
Oh, absolutely. Look, this company has been lagged behind compared to other classifieds and growth businesses. But when you're actually looking at its earnings and its earnings trajectory, it's been incredible in how many people are, sort of job listing, the numbers of job listing. And at the moment, what you're hearing is that with the reopen of the economy, the services industry, the restaurants and hotels, people are struggling to find staff. Now, in that kind of environment, this is fantastic for job churning, and the pure exposure to that space is really Seek. So, and it's not as expensive as the others once you take out the early stage losses and some of its growth investments.